All right, so we're starting the day, right? We're starting the day. This is what I do in the morning. This is what I did with you today live, Abram and Jerome and Ali, right, who are with me. So I start the morning. The moment I see this in the morning, not this, the moment I see this, I'm like, okay, here's my LA high, LA low, right? London Asian. This is what happened in the pre-market hours, right? I could look at ES too if I need to. I can go over here and look at ES to get the same data. It's the same thing, right? So LA high, LA low, right? It's the same thing, but so we're on SPY, so it shows it. Okay. All right. Now forget this. Like, just forget this. Don't worry about what happened the day before for now. Okay. All we're gonna focus on is just LA high, LA low. All right. We're just to keep it simple. You're just going down that decision chart that I gave you. Okay. So what do? So the first move is you map out your extremes, right? So here's an extreme, right? Now above that high up here, right? Above that high, like this, there is buy side liquidity. Okay? There's buy side liquidity. I'm going to make it red. Okay? They're going to buy in to that range. Okay? Under here, underneath that low, there's sell side liquidity. Okay? All right, so that's this picture that I have. It's this one. This is the same. This is all you're doing every day. You're just trying to figure out where those extremes are, map them out, and then inverse the idiots. Okay, that's what you're doing. You're trying to inverse these fools. All right, now market opens up, right? So what do? We know what happened because we did it, right? But what do? I did this with you live. So I'm like, okay, remember the first candle closed of the day, and I was like, what do we do, guys? What do we do? Nothing. Nothing. We don't do anything. It's not. Why? Because it's not at an extreme. It's not an extreme. When it does get to an extreme, something is going to happen. So something will happen here, I promise. Okay? Anytime it goes above or below an extreme, something is going to happen significant, because at that moment when that price enters this range, okay, when it goes underneath that low or above that high, you will notice typically the volume is going to elevate. It's going to stay elevated. Why? Because of that. In this situation, there's that sell side liquidity sitting under that low. Okay, they have to stir liquidity up to get you to do the wrong thing at the wrong time. Okay? Promise you, most retail this morning, they are trend line traders and stuff like that. They saw this, and they saw this price break, and they went short here. And what did we do? We went long there, right? So we're doing the Costanza method, right? I'm going to do the opposite, right? So, but why did we do that? Why do we do it? We saw this signal here. This is our signal, right? So it tagged it just barely, and BFI bought here. This is a buy order. Most retail are going to see that as a sell order, okay? But this is a buy order. Now, whether or not this wick fills later on and this trends, that is TBD. That's to be determined. We'll see. But as far as we know, the first time that price goes underneath that line, it's probably going to be an inverse order. So we don't think about it. Why don't we think about it? Because I've back tested and live tested this theory thousands and thousands of times. It works, period. So you don't think about it. There's no thinking. It goes under the low, you click the button, you trail the order, let's do it, right? So that's what I did. Price went under, I hit the button, trailed in, let's go, right? Now, if you go on your decision chart, when you get a low a day, right? When you get a low a day, let's say you missed that entry, right? Like Abram, like you missed the entry this morning, you missed it here, okay? So what are you supposed to do? You're supposed to set your order underneath that low to trail in, because now when this signal is printed, now maybe if it's even a better positioning the second time it comes around, Because you already got a fucking signal. It's already showing. It's like, hey, dude, we threw down a few $1 billion in this candle to do this. That's why it closed like that. It didn't close like this on accident. This is money. This is big money, right? So you set your order to trail in underneath that low, right? Now, okay, let's look at this as a setup. What is this setup right here? What did you forget look at this. What do you call this? This is a pop quiz in the middle of this discussion. You know what happened. I'm asking you, what do you call this setup right here? What do we call it? Where price goes down, nice signals, and then you got 1, 2, 3, 4 bars moving sideways. What do I call this? Exactly. Drop base rally setting up, right? Drop base rally setting up. Here's the best part, right? Yeah, DBR. Yeah, exactly. So DBR is you have a drop base rally. Now here's the even better part. This is what makes it even better. Where is it setting up? Context is always key, okay? The base is setting up where? Underneath the damn low. Where all the liquidity is. That's where the fucking orders are, right? This is, right? We just went over it. This is where all the damn orders are. So it's setting up underneath the low. That's why it's moving sideways like that, right? I don't know. That's how my brain works. I don't know. How do I see it? That's how my brain works. I don't know. That's just how it is. That's how it works. I don't know. You have to be able. Remember when we're trading, right? Remember what I told you. You're making decisions every time the candle closes. Okay? Remember that? Remember I talked with you about that. I watched this countdown all day long, right? I'm like, wait, give it 3 more minutes. Give it 6 minutes, give it 8 minutes. Let it close, right? And then when the candle closes, I make a decision, right? Now remember, you were asking me this morning. You were like, this candle, it closed just a little bit under that entry. But what did I say? I said, you know what? Give it a few more minutes. Just wait, because this looks like they just took an entry there. You saw me, or you heard, yeah, I was like, let's wait and see, right? And I was like, let's wait and see. So then it closed, right? It closed there. We're like, okay. And then it printed this one, right? Now, when this candle was open, it looked like it was reversing then, but see how it closed? It's like, okay, let's wait. Let's just wait and see. So I give it another 15 minutes. And I'm like, all right, all these candles are closing where I know there's liquidity. I know it's there. I know there's liquidity there, right? I know that. So I'm like, okay, so let's wait and see. But then when we get this next one, right, this is now starting to push and close above these wicks. So whatever sell orders were sitting here, now they're getting washed out, right? So when the price does this, what do you call this now? What do you call this? What does this candle mean to you? Here's the context. What does this candle mean to you in this situation? I'm gonna give you 1 minute to answer. Here's the context. This is what's happened now. What does this mean? What does this mean right here? This is the most significant one right here. After this has happened, this is the next most significant candle. Try to break it down. Try to break it down. Come on, Abram. It's okay. Don't be shy. Just fucking go for it. Whatever you got in your head, just give me an answer. Just go for it. Jerome, you get in there too, man. I know you're listening in. Get in there too. Give me some answers. Don't just have me hanging here by myself. Thanks, Ital. Appreciate you engaging. Come on. Give me something. What does that candle mean? What does that mean to you? What does this candle mean to you? What is the significance of this candle right here? Why is this candle important to me? Why is this candle important to me? Yeah, it's new high day. Okay, what else? What else? Why is it important? Yeah, it's definitely going above 50% retrace. Yeah. Oh yeah, it definitely did that. What else? Why is this one so important where it closed? Why is this close important to me? What's so significant about this close right here? Yeah, that's the answer I'm looking for. Yeah, it closed above this high, right? So now what does that tell me? What does that tell me? If when it closed above this high, that means to me that more than likely all these orders that are sitting here, all these sell orders, they're probably gone. All those orders are probably washed out. And now price can move higher. Price can continue. It can't do this if these sell orders are here. It can't. Right? If the next bid is if the sell order is at 592 for 10 million shares, right? And I'm in here bid 591.99, 8 million shares, it can't move higher, right? Because there's still 2 million shares selling above, holding it down. It can only move higher once the orders are cleared, right? It can only, that's from the very first video. It can only continue the trend once those orders are cleared, okay? Like those orders have to be cleared out. Now, here's the next part of the day. I said take a trim, right? Because you don't know. This price could just reverse into, there's sell side liquid or buy side liquidity here too. There's buy side liquidity above that high, right? So back to this chart again. Back to this. Here we go. It's the same thing. That's a high. It's an established high, okay? Right there. There's going to be buy side liquidity sitting up there. So I take a trim, right? And then I said, okay, wait, let's see what happens. Let's see what happens, right? So then we move forward, okay? All right, now we move forward. Now, remember, they push this with volume, right? This volume bar, what's happening inside that volume bar, okay? That's all these freaking orders getting taken out. That's what that is. That's why this is doing that, by the way. Just a little side note. As this price moves up and it enters this range, this increase in volume is the large exchange of orders. Okay? So when it closes on the next one, that tells me, okay, they're gone. Most likely, whatever orders were here are most likely gone. Now, there could be more up here, of course. That's to be determined. But I know that when this price closes up, right, I know that these guys, anything that was here, they're gone. They have to be. They have to be. They can't move past it without it. Now, all right, let's go forward a little further. Okay? Now, I told Corey, I said, hey, this is a mitigation line. So, and this, whatever liquidity is up there, whatever liquidity is sitting there, it's probably going to pull back to that line. So if you want to get back in, or if you were swing trading, this is where you would pyramid your trade, right here. This is where you would pyramid it, okay? So price runs up, right? Pulls back, and then what's this? What is this? It's another signal, right? You guys following me? This is another signal. It's printing a signal at the mitigation line. It's a pin bar. It's another pin bar printing there. And then another one. So, question, what do you call this? What is this called here? Structurally, I'm going to draw it. What is this? What is this? What do I call this price movement? What is this? I've said this a million times. You're on the right track. I'm looking for a different verbiage though, because it's not quite a base. What is this structure called? Just look at this. Right here. 1, 2, 3. What do I always call this here? And you'll see me talk about this on high and low time frames. This is a low time frame. It would be a liquidity sweep if you were going short. If you were going short, it would be. Oh, I like where you're thinking though. You're on it, okay? But remember, our trend is bullish though. Our trend is bullish, okay? So I'm just gonna give it to you. All right. So it's a break and retest. That's what this is. It's a break and retest. So if you ever miss a trade, right? Like if you miss this whole move and it breaks like this over a key level, break, hold, close, buy side liquidity, comes back, retests, prints a signal, dude, it's time to go. Time to go. Time to do it. All right? So I added back into my position here, and so did Corey. Now that's a little more advanced trading method, but that's what you're supposed to do there. Now, let's get all the way to the end of our extremes. Now we finally get to this extreme here, right? From our pre-market. So, what's this up here? What's this? If we go on our decision chart, right? What are we supposed to do here? What are we supposed to do here? Or what's happening here? Why did this happen? Why did this occur? What are we doing here? And why would it be an error for us to hold? There's multiple reasons why it would be an error for us to continue to hold. This was where this question was initially going. Yeah, it's hitting supply, all right? What is this red box here? What is this red box? What is that? That's right. Yeah, it's buy-side liquidity, right? So the same way that we expect buy-side liquidity to happen here, which it did, right? We expect it to happen here too, right? It's the same thing. It's the same idea. It's just farther along the chart, right? So, question for you guys, right? Does it come as a surprise that price did this here or here at those very specific spots? Is this a surprise for you now when it does that? Shouldn't be. We just went over it, why that's occurring, right? Okay, all right, good point. Why? Why did the second one go down more than the first one? That's an even better even better question. That's a good question to ask. Why did this one travel further than this one? Yeah, it's at a farther extreme of the chart. It's just farther on the extreme side, right? So like this is mid chart, right? Mid trend. Yeah, exactly. Yeah, there's just more orders there. There's just more. That's it. And so when we took this short, right? Why did we take this short here? Why didn't we take the short here, and why did we take it here? For that same reason. We took that short here because it's likely that the orders that are present up here are bigger. They're just coming with bigger guns. Right, exactly. So we know, so coming full circle now to the original question that Abram asked, or that I was explaining to Abram, is why wouldn't we want to hold our longs beyond this point? Because the size of the orders that are sitting here at this level, above this, sorry. I love it when it's working for me, and then when I make mistakes, it's annoying. Okay. The size of the orders that are sitting above this level are probably pretty large. Probably. We assume that, at least. We take that under assumption that those orders were the orders that caused this price to make this big move like this and this big move like that. So holding long, especially, here's the biggest key, especially after we've already caught this whole move up, is stupid. It's a trading error. Because you just caught freaking 5 points, man. 5 points on SPY and you held the whole thing? You are a fool if you don't sell this. You are a fool. Yeah, it went a little bit higher later on. Okay, great. But if you don't take exit here, you're asking for a bad day. Because price doesn't, it doesn't, you have ranges for the day, like when price does something like this, or like this is outside of a normal day. That's not normal. It doesn't move like that. Most days are in range, and the current range on SPY is probably like 4 points or 5 points on the day. We can check right now, just for the video. Let's see. What's the current daily range? Yeah, okay, so it just elevated because of the last 2 days, but yeah, it's 4 points. It's basically 4 to 5 points. So anything outside of that, like if you've already caught 5 points on the day in SPY, you won. You won. That's it. There's you won. You won the day. So trying to get more than that is greedy. And actually, not only did we get 5, but we got 5 and then 2. So we got 7. We got 7 points out of a 6-point day, basically. Like that's, because you got 5 long, 2 short. Oh, you win. You know what I mean? And so the chances of catching a short from here are high, right? Chances of catching a short from here are high, exiting your longs, getting a point or 2 going the other way, freaking beautiful, right? That's an amazing day. So can you break down the profit of that day trade? Yeah, absolutely. I'll show you visually. So I had everyone get on the 592 call this morning. And I'll show you with a visual. A lot easier to see it that way, so you can understand how it worked, right? Oh no, 591. What I put you on? I think I put you on the 591? 591 or 592? I forget. I was trading SPX. Let me go back. I think I put you guys on the 591. Maybe. It doesn't matter. Percentages are all about the same. So let's go here. Let's get a visual. Alright, yeah. Okay, here you go. So here's a visual of that trade. Move this up. So their final exit would have been at that top there. So I put that on there. So this was like, let's see, we'll take a mid price. So it was like 180 to 380 basically. So whatever that is percentage wise. Let me give you the visual so you can see it. Yeah, so this was their trade right here. This was their trade right there. I'm pasting it in the chat. So that this was the contract that they traded today. Yeah, I'm pretty sure they were on the 591. So they entered in that lower range and then trimmed as it ran. But their final exit was that red line at the top. That was the last one. The last exit at like 380, 390, 400. So yeah, back to you, Abram, right? So as you notice, like some of the guys in the group, they're sharing their orders for the day. They're sharing their orders. They're showing what they did. Now they've built up to that point where they are trading, 10. Well, you saw Corey. He's trading like 10 contracts. Ali's probably trading he's probably trading SPX. But if he's trading SPY, he's probably trading 30 or 40 contracts, right? And that gives him the ability to scale differently, right? When you just have one or two, it's a lot harder. It just, unfortunately, that's just the nature of being a noob. But you're trying to work through this process, right, daily. And working through this process gives you that ability to say, okay, I can risk 200-300 on this swing, because if it doesn't work, that's all right. I can just go back to the day trade and I can go and get $500-600 in one shot, right? Or I can pile it in, and so we use both in conjunction simultaneously to get those to basically enter those trades without stress. Like if it works on the pilot, cool. If it doesn't, all right, we'll just make it back in the market. But you did the correct process though. Even though it continued to run, I wish you would have had two contracts. When I tagged it twice, when you missed that first entry, you should have had two. I'd say that's probably your only error today. If you had two, man, you would have held one, right? You'd have clipped that first one right there. You'd have made, I don't know, $70, right? But that fucking second one, that would have been the one you would have made. What was it? You were on the 591 today, just to make sure. You're on the 590. What was your contract? 591 or 592? Just to give you like an understanding of what you would have had for the day. 591. Okay. Yeah. So your second contract, if you tagged it one more time in anywhere in that hour, right? If you tagged it once more, you would have had 380. What'd you buy it for initially? 170? 180. Okay, yeah, so you would have made 265 for today with the same exit parameters. You would have sold one right there, right? You would have sold one here, like that, like you're supposed to. You would have sold one there, and you would have sold one right there. And you would have made like 275, 280 bucks for the day. And that's a fucking good day. Yeah, he bought one for $180. Yeah, he was supposed to grab two. That's all right. That's okay. Yeah, he's just following the process. Yeah. Yeah. One for Oh, you sold it for 268. Oh, okay. That's not bad. Oh, yeah, I see that. Yeah. Okay. Yeah, I'm looking at it on the chart here. Yeah, you would have sold it for like around 270. 380. Yeah, he would have got, if he just had the one and just held it all the way out, he would have got an extra $100. But that's why you're supposed to have at least two. If you got two, then it's because you got to have some flexibility. Okay. Well, it's not only 2x, but it's more about the flexibility. It's having the flexibility, because once it's up here, right, once you're up here, now the contract's 280. Let's see. It peaked on this. Let me clean up the chart. So it peaked right here at 330, right there, and the low right here was 230, 225. Okay, so then he would have had the flexibility to have a stop in place. Well, 246 minus 185. That's 65. Yeah. Because once you have, what I was getting at is once you have it up here, right? Now he's got $100 or $80 of profit on 2 contracts that he could put a stop in at break even and see if it goes more on the second one, right? And if it just retraces, if it comes back, he's got enough room that it can, he can have just put a stop in. A 5-point move on a 1 DTE was it's a little more. So it went from basically from here, from here to here. Like if you bought in this base here, anytime in this, anywhere in the middle of this base, it's like 165, 170 to 380 to 400. So what is that? That's like 170 times 2. So it's a little more than double. Yeah, it's like 2.5. Remember, Abram's entries are a little yep. Yeah, it's just typical day, Abram. Yeah, this is normal. This is what the guys do every day. This is what everyone's doing in here. Ali, Corey, myself, Jerome, they're doing the same move every day. Yeah, this is a typical day. Yeah. Yeah, there's nothing special. Well, I'm sitting there telling you to get in the damn thing earlier. I'm like, guys, I'm taking the entry here. Take the 591 call, blah, blah, blah. And you're like, wait, I was supposed to get in? I'm like, yeah, man. If you put 5K down, you would have made, let's see, I'll give you a rough estimate. If you had put 5K down, you would have clipped 30. Well, I'll just ask Ali what he did, because I'm assuming that's probably what he put down today. He probably made about 10 grand or so, but let me see. If you had put 5,000 down divided by a 1 point, let's just use the average, 1.7 on the contract. So you would have had 5,000 divided by 170. So you'd had 29 contracts. You'd have clipped 30% at, you'd have clipped 30% here, like I told you guys. That would have been here. You would have clipped 30% here when it broke out. That would have given you an average of about 2.7 on that's the mid price of the two. So 2.7 times 270 times 10. So 2,700. And then you would have sold the last one. I'll just give you the mid price at 380. So 380. So 2,700 times 380 times 20 plus 2,700. So 380 times 20 plus 2,700. About 10.5 average. Yeah, you'd have made about 10,000. You would have made 10,500. Yeah. Or sorry, your total would have been, what was that, 13, about 14,000 total. Yeah, so you'd have made like 9, give or take. And that's using the averages, assuming you're just entering. You're doing exactly what I'm telling you. So you're just, let me clear this off. I don't want any drawings. Okay, so that's assuming you're just doing this, just entering in the sweep range like that, trimming here above the high, trimming 30%, and then taking the final exit in the break of this level. So sell 30%, sell full. And using a mid, I'm giving you an average out of each range here, the middle. So not assuming that you got an absolute low like this, not assuming you also sold at an absolute low, or sold at a high, or sold at a high, or sold at a low, etc. Just giving you a mid price. So that way it averages out. Yeah. Yeah, today was a sweet move. So when it's ranging, your moves are shorter. So are people putting more down on the smaller moves to keep intraday successful? No, not really. No, most of the guys, they trade with about the same size pretty much for everything. The only difference with the day trading and the swing trading is how much you put down initially. That's the only difference. The initial throwdown is a different size. Because on the swing, we take these pilots, right? We take pilots, and the pilot, like me personally, my pilots are typically smaller in size, unless I got something that like I'm like really gassed on, like the Tesla was like a couple months ago, you know. But yeah, for the most part, pretty much same size. What's what called? Oh, it's just a break and retest. Yeah, you're talking about when price broke the high, right? When it went like this. Yeah, it's just a break, retest. That's all it is. That's all I call it. Uh-huh. Yeah, exactly. Yeah, we're trying to be perfect. I mean, not perfect. We're trying to get in first. Sorry. Yeah. Yeah. Yeah, we're trying to get in first because, okay, I'll give you an example. Ital, I'll give you an example on this. So we did this Micron trade a few weeks ago. I didn't call this one as a triple T. I didn't call it as a triple T because it didn't give me the full retest. But it was valid. It just didn't give me the full retest. So I was like, all right, guys, I'm going to take this, but I'm just going to pilot it, right? So I'm going to show you kind of why that is. So we took this pilot right here. I was waiting for this to give the call out, but it dropped in base. So I was like, all right, I mean, it's got a structure, like it's got a signal. It's worth a pilot, right? But we took the entry, right? We took the pilot, but then it just immediately jumped the next day. It jumped 5%. So I'm like, oh, shit. You see, and that's what happens sometimes. Like you're in a pilot, right? These were like $390 actually on the dot. So we take the pilot. So like some of the guys in the group, they just took like 1, 2, maybe if they have like a bigger account. I think Ali took like 8, something like that, right? Because he's a 6-figure trader. So it's like he takes the pilot, but then the next day they jump from 390 to freaking 800, right? And now you're like, ugh, shit, And then you're like, all right, if you're swinging, cool, you can add, right? But if you don't take that initial pilot, what I mean is, if you don't take the initial pilot, you're afraid to add because you're like, ooh, now they're 800. You know what I mean? Like now they're really moving. So then same thing happened the following day or the next market day, right? It's like it jumps from 800 now to 13 in just 3 sessions, and it's like, oh fuck. So if you didn't take that initial pilot, now you're scared to even get in this. You know what I mean? So, and which you should be. You should be scared because it's like, yeah, yeah, they are. Yeah, they are. They are a mind fuck. Absolutely. Absolutely. Yeah, perfect entry is pointless. Yeah. Yeah, you just pilot and you just know that, like, all right, this money, I'm putting it up. If it works, cool. If it doesn't, I'm okay with parting ways with it. Because I could just make it back on a day trade. I'll make it back tomorrow. I'll do it the next day. I'll do it, Tuesday, whatever. Tuesday afternoon. I can do it in 1 hour. It's like this. Ital, this move right here today. This move right here. This. Forget this. Forget this right here. Forget this whole thing. Just this one move right here. 1, 2, 3, 4 candles. Okay? I did a 0 DTE. The other guys did 1 DTE. Guess how much the percentage gain was on this 4 candle move? Just guess. 4 candles. It didn't go anywhere. I did a 0. But just guess how much this was percentage-wise. This one move. This will illustrate the point why I don't care if or why the traders don't care if a pilot gets burned. Yeah. All right, look. I'm going to show you. I'm going to show it to you. The contract that I was on, or any of the contracts that were in that range, right? I'll show it to you, and you're going to be like, what the fuck? You're like, what the hell? And mind you, that was not even the big move of the day. Like, that was not even the, that was a relatively speaking small move, right? But I jumped on a 0 DT because I was like, all right, this makes sense. Buy side liquidity, let's go, right? Now, this is more advanced, right? This is a more advanced trade because of the speed at which it occurs, okay? But I'm going to show it to you, and you're going to be like, what the hell? Like, that's a crazy move. So look, here you go. These are the contracts I was buying. They were like $275 each. Now, even I got out a little early because I was like, all right, well, this thing already moved a lot. Like, I'm good. But here you go. Here's a visual. This is what those contracts did right there. In that little 1 hour move right there. You could have missed the whole freaking day and just waited for this freaking buy side liquidity to come in and just do a 1 hour trade and be done. And you could have been done in minutes. My trade only lasted what? Let me go look at it. I was only in that for, I got in at, let's see, where is it? I got in at 11:25, and my first trim was 11:38. It was only what, friggin' 13 minutes long. It was only 13 minutes long. I caught that first move, that first rip. Yeah, so like when it's getting close to the end of the day, there's not a lot of time left. So every tick is it counts. It counts big. Because the contracts are running out of time. So if you have a contract, okay, I'm gonna show you. So like in this case, I bought the 5960 contract, okay? So in this case, there's only 2 hours left in the day, right? And I bought this 5960 contract. This contract is now out of the money when I bought it. I bought it up here in this red, okay? If the day ends up closing here, which it did, that contract will expire completely worthless. It will die. It will be worth 0. It will be worth nothing, okay? But if I get even a tiny move like this in my favor, that contract is going to fly because this goes from out of the money to in the money. It goes from only having extrinsic value, which is time value, to having extrinsic and intrinsic value. It has both now. When it has both, the contract, just like I just showed you in the picture, goes from $275 each to $1,300 each. You see what I'm saying? So like in that first few minutes, I only held it for a little bit. I only held it for 15 minutes. Not even 15 minutes. That first leg right there where you see where it goes off the red line and it rips into green, it goes from 250 to 700 in like 6 minutes. All right, cool, I'm out. Trim, 80%, I'm out. Because I just tripled up. $250 to $700 per contract. $500 per. That's what Ali was doing too. Ali was doing the same thing. $500 on each one. Corey was doing the SPY contracts. You saw his orders. He posted them earlier. The 10-pack. I think he did $100 on each one. But he bought like 10 of them though. So he made like, I don't know, 1,000, something like that. 1,000, 1,500. Something like that. So yeah. Yeah, the nature of day trading is interesting, to say the least. So, by doing exactly what you did today, but buying 2 contracts instead of 1, your day would have felt entirely different. Instead of $270, instead of $70, you'd have been $270. That's it. You'll just work your way out of it. That's why I said, remember, yesterday we were on the. Was it yesterday? It was Saturday. Saturday we were on a call. What did I say? I was like, I'm really going to be holding your hand to really help you with this, like more than I normally do. So, which is fine because I want to see you do it. I want to see you and Atal. I'd love to see you guys succeed at this. So I'm like really hand holding here to like, all right, you're gonna fucking get this. you're gonna get this, or else. So that's what I got for you. I wouldn't. All you got to do is just do the same process you did today, man. That's all you got to do. Good. You only made 1 error today. That's great. So, and I think it seemed like it helped everyone today, like me being like really attentive. So I'm going to keep doing that. Like I said, I'll be on every day at 6 and I'll be live. Yeah, you could have just bought 2 contracts. You'd have made $300. You made 300. That was a great day, man. $300 a day. You got to understand. Check this out. Think about it like this, Abram. $300 a day, okay? 252 trading days a year. How much is that? Just 300. You're a 2 contract trader. Let's say you don't even go upsize. You're just a 2 contract trader. You average $300 a day. How much is that? You have a $75,000 year. That's a good year. That's you have a job, like a salary, and that's averaging 300 a day. And that was nothing. Like, I would say like Corey is like he's like intermediate to advanced. Peter Drucker. He's like he's pretty advanced. He knows what he's doing at this point. He's advanced, right? He's advanced, but like even him, he's doing 1,000, 1,500, $2,000, 2,500, $3,000 every trading session. Every session. You see him posting it. I don't feel like I'm like exposing him here. He posts his stuff in the chat, in the chat, you know. So like, you see him do it all the time. And so like he just dialed in like this year. I've been freaking pressing him to do this stuff for 2 years, but he just, I don't know, something changed. Something changed for him mentally. It was not a technical he is. Yeah, he's more than just a professor. He's the freaking head of the mechanical engineering whole freaking, like he's like the professor for the professors. He's super smart. He understood this shit though 2 years ago, man. Okay, everything I just explained to you in the last 45 minutes, he has psychological error, not understanding error. You see how smart he is. He's super sharp. His ability to analyze is amazing. He knows what he's doing. Technically speaking, he doesn't need me. Put it that way. He hasn't needed me for a long time. Yes. That's why you notice he's sometimes a little short with you. Because he's like, come on. But he's just giving you shit. He's actually a really nice guy. Yeah. He's really nice. He's just giving you shit. Sorry, I missed your question. So let me understand this. When that short opportunity presented itself that you took, you found it extra advantageous because you knew the price of the contract would be so big and the move needed to be so small. Yep. Yeah. Yes, sir. I only need, dude, at this point of the day, I only need 1 candle. That's it. One candle in my favor, and I'm fucking gold. That's why I did it. That's why I did it. No, you're not. That's the cool part. No, you're not. So here's the thing. I entered the trade, right? I put a stop in. Okay? I put a stop in. The price of the contract is so small because they're cheap. They're cheap at that time of day. They don't cost nothing. Like if you were trading the equivalent SPY here, let me see what that would be. The equivalent SPY would have been basically a 594p. And those were, I'll tell you right now, they were probably less than 20 bucks each. Let me see. Here, I'll show you what it did for SPY, just as like an opposite, or not an opposite, but a sympathy trade alongside me, right? If you were trading the SPY contract instead, those were, let's see, they're pennies, I'm sure. Let me see. They were, well, I guess no, it wouldn't have been a 594. It would have been a 593. Yeah, it would have been a 593. So, yeah, because 594 would have been at the money. 593 would have been out of the money. Yeah, that's what you would want. So it would have been right outside the money. Yeah, they were 20 bucks. They were 20 bucks, and they went to $1. So they went 5x. So the point is like they're so cheap at that time of day. Yeah, exactly. Yeah, I can fuck with that too. Yeah, here's the visual of it, just so you can see it. Yeah, they were 20 bucks. They went to $1. Yeah, so like that's what I'm saying. You could buy 5 of them for. It wasn't. I was gonna put you in it. It just didn't do the thing where I could make it a call out. I was waiting for it to go one more sweep. I was waiting for it to do one more here. It just didn't do the thing. The advanced traders, Corey and Ali, the advanced traders, they're like, no, they're open to just taking the risk, like fuck it, right? Like me, I'm like fuck it, because I'm like, all right, well, if it dies, it dies. I don't give a shit, right? I don't care. But I was waiting. The correct setup, Abram, for a high probability trade is to take the entry. Let me show you. The high probability entry is to take it like this. It's right above that. It's to take it right there. It just didn't do it. It didn't do the thing. That's all. That's all it is. We needed one more. Take what we did in the morning. See this? Take what we did in the morning, just invert it. It prints the low, it pops, it sweeps, and then it takes off. That's the setup. It prints the high, it pops, it sweeps, and that's the setup. You take the entry. It's the opposite of this here, though. That's why I didn't call it. Yeah, they were. They were cheaper. Yep. Ital. Yeah, they were cheaper here than they were over here. Yeah, because the time of the day has decayed. Yeah, they're cheaper here for sure. For sure. Because there's less extrinsic value. Because it's decayed by 4 hours at that point. And that's on both sides, long and short. I don't know if you call it luck, but it's just a setup. That's it. It's just a probabilistic setup. Sometimes it works, sometimes it. Oh yeah. Well, both of them, right? Same thing here. Same thing. This and this. It's just the probability's there. Time to do it. Like all 3 entries today, right? So I did 3 entry. 3. I did 2 here, but all right. So it's 1, it's 2, right? It's 3, and then it was this last one, 4. Right, so those are my entries on trading today. Right? So it's just probability. So it's like, all right, short here, long, long, long. Which one? Yes, the long was the easy trade. This was the hard trade. This was difficult because it didn't give the full setup. Yeah, this one was harder because it's not supposed to, but the ideal situation. You know what? Let me give you one last tidbit on this. Okay, the ideal situation when this happens, when it. Oh, sorry. Take your call. It'll be on the recording. Just watch the last 10 minutes of it. I'm just gonna say it anyways. The ideal situation. The reason why, Abram, is when that high prints. Okay, when that high prints like that, what would happen is when it prints that next high right after it, they'll chase it with calls. That's why it works. That's why I didn't call it, because the setup wasn't there. If it had gone one more fucking move right here, not here because there's not enough time. You got to do it over here so you have enough time for it to play out. Retail be too scared to chase here, but they'll be ballsy here. They're like, oh, I got 2 hours. I'm going to go for it, right? And that high printed and it pulled back, if it had done it on that next candle and got a new high aggressively, I promise you, 9 out of 10 times, they're going to chase it right there with 0 DTE calls, and that's when you take the fucking entry and you smoke their ass. Okay? Exactly. Yes, precisely. Their orders would have triggered an aggressive short. If they had pushed this right here, this probably wouldn't have happened. They just didn't do it. That's all. They chose to do this instead. But if this had pulled away and then moved up aggressively, I guarantee you retail would have chased it and you would have seen one of these green bubbles show up right there and we would fucking short that shit. And the same, notice myself, Corey, and Ali, none of us went heavy on that trade. That's why. They know, you don't. But you know now. But that's the reason why. It's on your decision chart, by the way. It's on there. It's on the decision chart. That's the setup. Because when that happens, the probability of that working goes way in your favor. You got it? That's why I didn't call it. Because it didn't do the thing. That's why I called this one. That's why I called this one, and I didn't call this one. That's why I called this one, and this one, and this one, but not this one, because it didn't do it. This was subjective, intuitive. I saw the signal, and I was like, all right, fuck it. If it works, let's go. You know, I didn't buy a ton. I didn't buy a ton of contracts. I mean, enough. It was made, you know, it's definitely significant. I wouldn't give that money away, but it was, you know, if it had gone here though, I would have probably put 2 or 3% on that trade. Then I would have put real money on it, you know, and made a fucking day. You feel me? So that's the reason why. Okay. It's okay. It's all right. Good day. You did the thing, man. Do it again tomorrow. Here we go again. Do it again tomorrow. Do it again Thursday. Do it again Friday. Keep doing it over and over and over again until all the stuff that I'm saying to you is second nature. I think because I'm giving you the extra support, you probably don't feel lost, which is fine. That's what I want. I want you guys to get comfortable. So I realized that I was not bridging a gap there, or there was a gap there that I wasn't bridging. So that's why I'm doing this, to help you, to help all of you. Okay? So I'm glad that you feel better about it. I wish you would have taken 2 contracts, but that's okay. That's all right. Making one error is not the end of the world. Making a bunch of errors is. So it's still pretty good, all things considered. What's interesting about you, though, you know what I've noticed? You don't have an issue with um, with holding. That's interesting. Most people have an issue with that. It doesn't seem like that's a problem for you, though, which is interesting. It's a good thing. It's a great. I hope it doesn't change, but it's interesting. So, both positively and negatively, you're okay with it. That's what I'm saying. You can sustain it. So that's all right. That's all right. All right. Tomorrow again. This video lasted a whole hour, so let me cut it off so it doesn't just run off to oblivion.